Hello everyone, this is Ken Martinez with Mark Investments introducing a brand new cash flow calculator specifically designed for note and real estate investors. I developed this calculator, which is really just a Microsoft Excel spreadsheet with tabs calculating already for you different scenarios that you'd want to look at as an investor in notes and real estate. The benefit being that I can do that because it's a spreadsheet and all I have to do is put the formulas and you do the input and everything else will be done, will calculate automatically for you. So I really like this spreadsheet idea. You do need Microsoft Excel 2010 or later, but it does have the benefit of being able to see everything as opposed to a calculator where you're just limited to a single number on a very small screen. So there are some nice benefits from using a spreadsheet. I do have it broken up into 9 separate areas, 9 separate colors that correspond to the tabs on the bottom that sort of model the life cycle of a note from setting a goal to possibly owning a house, and then some other personal finance issues here. Each of these tabs are labeled up here and their specific areas are all hyperlinks with a brief description of these. And today's video will just do a brief overview of all of them, so we'll move pretty quickly, but look for other videos for each of the separate areas. We'll cover more in depth. My email address, my contact information is down here, mark55llc@gmail.com. So if you want to know how to invest in this calculator for your own needs, just send me an email and I'll let you know how you can get a copy of this and what your investment will be. So let's start out with the first one. All of the tabs work the same way except for a couple of reference tabs, but the ones that do have cash flow calculations, they'll have light blue cells, and these are your input cells. You change the input, everything else will change correspondingly. So as you can see, instead of 8%, change to 5% or not, and you'll see everything will calculate automatically for you. This one just calculates how much money you'll have starting at a certain age and ending at another age. The rule of 72, how long will it take you investing at this percent to grow to this percent? So it's actually more comprehensive than the rule of 72, which is doubling, but maybe you just want to know 200% return or 213%. You can do that. This will automatically do the calculations for you. How to evaluate the effects of compounding on your cash flow. So over a period of 35 years, you can see the effects of different frequencies of compounding, including simple interest. The red section, borrowing money. First one is joint venture. If you know what your estimated return is, how much you should offer a debt partner based on your debt coverage ratio, or your equity partner. Is it 50-50 split? Maybe it's not. Maybe it's 60-40. This will help you with the calculations there. Loan cost. For up to 5 loans, you can calculate. This will calculate the loan constant, the true cost of a loan, so you can see which one is the best for you. How long it will take you to break even and the return on your investment if you buy discount points, and what's the most a bank will lend you based on their DCR. The orange section, due diligence. The states tab is really just a reference tab of each state along with specific information you'll need to know, like hardest hit state and trustee states and so on. The next tab is Zillow. This will tell you, this will actually grab all the pertinent information from Zillow for up to 500 addresses. You input the list here, click on the button, and it will programmatically and automatically, assuming you are connected to the internet, get everything for you. Prices. What are the key things you need to know for first position non-performing loans? Put in what you received from the vendor. Here's what you need at a minimum, and it will calculate the 3 key metrics you need to know as a first position investor. And what are the current market prices for first and second positions as I'm doing this in June 2015. Once you get your note, you should double check the arrears. This will do all the arrears depending on how they calculate it and give you a final total there. So you don't need to do that work otherwise. The yellow section now to analyze your notes. This tab does duplicate exactly the 10BII calculator. along with on this side for a specific cash flow, you input what you want to analyze, and it will answer the most the most pertinent questions that you'll need to know on your note. So this is really the calculator page. Given a cash flow, so you have your inputs, and given a specific cash flow, what is the effect of increasing or decreasing any of your 5 inputs? And you'll see the effects down here automatically done for you. You don't need to figure out how to do it. I've done it all for you. The net present value, so for a given payment stream and an initial investment, what is your net present value? And is that does that hit your goal or not? And what is internal rate of return? It'll actually give you a visual graph on where that's where the IRR is being calculated. If you want to compare your internal rate of return along with 4 other key metrics up here for 5 different cash flows, that's what this tab is for. You put them up, your inputs here, and it will tell you what the best investment is for you. And the light green, strategies with the owner. So here is just really another reference tab on credit score guidelines. So I get an idea of how the credit's affecting the borrower. Can you afford, so this tab for a given income of your borrower and a payment to income ratio that you're comfortable with, how much does that equate to a loan at various interest rates? Workout strategy for those of you that are investing in second liens. These are the inputs you'll need to know. It'll calculate whether you have equity or not. And then the question that you need to ask on that, and then where does that correspond in terms of workout strategies here? So this will help to guideline you, give you guidelines on that. But maybe you're going to sell the note. If you sell the note, you are going to need an amortization table. This is a complete amortization table along with the graphs, balloon payments, an opportunity to prepay on principal. If you look at the bottom, it does zero out like every good amortization table should. The last payment should be 0, so you do have all of that. But maybe you only want to sell a partial. A partial is just 2 amortization tables on top of each other, one for the partial and the original. And what do you get if you're going to pay? What happens if the borrower pays off early? This handles all of that for you. Maybe you're going to keep the note. If you keep it, it's either going to be in a tax deferred situation like an IRA or a taxable like if you buy it in your LLC. Either case, you're going to have fees, so you're going to need to evaluate the effects of taxations on your yield and on fees all intermixed, so you can compare up to 6 different scenarios and which one is the best. The velocity of money, how much more can you increase your return if you're able to reinvest your payments from your cash flow? That's what automatically does that for you. What if you end up owning the house? Then it's just like as if you're a rehabber. If you want to flip it, here's all your calculations to calculate your cash on cash return. But maybe you're going to keep it as a rental. Here's your income statement, your standard thing, expenses, the income, and your cash flow model along with your cash on cash return, all done for you. Maybe you're going to finance. You're going to need to evaluate the effects on a number of years on your mortgage payment for this amount. Or maybe you want to keep your years static, but evaluate the effect of interest rates. So this is the benefit of a spreadsheet, is you can evaluate all the different scenarios in one clean, easy to look at table without you having to do all that work for yourself. The other thing is the 4 pillars of real estate: principal, pay down, appreciation, positive cash flow, and tax benefits on your interest and depreciation. All of this is calculated for you. The last tab is really a couple of fun scenarios on races, like who wins out if you invest conservative or aggressive, the power of compound interest versus and starting early versus starting late, and over here, when does depreciation on your property overtake the interest paid? That would be a benefit for you as a homeowner. So that's it. These are all the scenarios I could initially think of that a note or real estate investor would want to know. Again, here's my contact information, mark55llc@gmail.com. email me so to know how you can get a copy of this and what your investment will be, and look for other videos on each of these areas to follow. That's it for now. Ken Martinez from Mark Investments. Thank you.